Hey, welcome to the Closing Beat, everybody. Happy Wednesday to you. How's it going out there? Everybody's good? Hope you're having a good day. We're financial advisors here at Jazz Wealth. Check us out at jazzwealth.com. While other advisors are playing checkers, we're playing chess in the game of what do you do if your tax loss, or this year, tax gain selling, what do you do with that money? You can't go back into the same thing. How do we handle that? What's the best course of it? Love working through that with clients because that adds money to the pocket, and that's what we like to do, add some value there. Wine and Wealth tomorrow night. If you're one of our clients, come hang out with us, join us, grab a drink. Let's get a little loose, and we're going to talk about how rich people use donor-advised funds. What in the heck are they? How can you use them? I'll give you a couple specific examples, and we'll go over some of the things that maybe, just maybe, you haven't thought about, and you certainly won't see on the old interwebs there. All right, let's take a look at the, that's waste management. Let's take a look at the S&P here, hitting new highs. I believe on a total return basis, I believe that's new highs. I'm not too sure there, but the Fed kept rates steady, meaning they didn't change them, cut them, lower them, raise them, whatever. And they didn't really try to downplay too much there. In fact, you probably saw the discussions about, 3 rate cuts. Is that what we're going to do? We're going to do 3 rate cuts there. The dot plot showed 3 rate cuts there. They also adjusted their assumptions on inflation to a little bit lower there. Their official statement had like 3 words changed in it, and the press, believe it or not, actually asked them about 1 word. Hey, man, you changed the word to any. Can you tell us more about that? Like literally, people hang on 1 word that they say there. They recognized that growth had slowed there, and they saw that the impact of their rate hikes was working, but they said, we don't know how well this is going to work. They kept phrasing in the comments there that their tightening would weigh on the economy, but guys, we don't know. That's literally like not word for word, but I said, it's uncertain. We don't know the effects of it. We did it. We'll see what happens there. They said the extent of additional policy firming, that was the previous phrase. They changed it to the extent of any additional policy firming, and that was what people said. Like, whoa, you changed the 1 word. Can you tell us more about that? They're not stupid. He had the answer. He knew people would ask them that. I mean, that's it. But let's talk about the dot plot real quick, because it occurs to me I talk about this, and maybe you guys don't know exactly what it means. So I went and got it for you. Let's take a quick look. This is the actual dot plot from the release here today. You can see it looks like a dot on a plot. Right? There's nothing complicated about it. We categorize them into years. So down here at the bottom, if you can't read it, that's 2023, that's 2024, 25, 26, and beyond. What we have is all the participating Fed members that did choose to participate in the survey here. They said, for the rest of 2023, we think rates will stay right here. If you follow the line over, you're going to see that the upper range is 5.5. So we're at 5.25 to 5.5. That's why the dot is not on a line, it's in between the lines. Well, if you look forward, the reason they say there's going to be 3, or they're projecting 3 rate cuts, is because here is the spread of those surveyed at the Fed. This is not like a public survey. These are the Fed voting members here. Well, 2 dudes or women up here at the top said, we're not going to do anything. I just don't think we need to. Somebody said, okay, just a little bit. But the majority of them fell right in here, and that is 75 basis points lower than where we stand now. All that means is that they're thinking that the way things are going, they'll be able to cut rates by 0.75%. You go down to another 1% more after that. See where the bulk of the guys are. We're looking at where the majority of people are, right? There's still somebody up here that says, no, we're not, no, just leave the rates. This is fine. 1 lone straggler there. But we don't count that. We look down here, we say it's 1. Then we look down a little bit further, say another half. And then over the longer run, the majority of people expect the Fed funds rate to really kind of hover around the 2.5 in terms of the upper range there. So if you're ever curious what the dot plot looks like, that's it. You can look it up if you would like to and see it. It is just search like the summary of economic projections and click on the one that the Fed has. It's about a 20-page document, and somewhere usually at the beginning, page 4 or 5, you're going to find what you're looking for there. Over to the stock market today. I'm going to change it up. I'm going to start with the Russell. Did anybody see the Russell today? The media is like, the Dow, oh my God, 500. Look what the Dow did. That's incredible there. Small cap as a whole, by the way, outperformed every other index by almost 3 times. 3 times, right? Let's just call it double. Okay, it was 100% more than any other index out there. Whoa, small caps blasted off in small cap tech, finance, banks, things like that. real estate, healthcare, all of them. Just, man, what an incredible rally there. Doubled all the other indices there. And over the last 30 days, it has doubled all of the others in terms of performance at about 13 or so % there. If we look at the S&P, there we go. If we look at the S&P there, broad rally today. Remember we talked about that yesterday. You want to see a broad rally. When everybody's participating, gives you the warm fuzzies. You have, okay, all right. I didn't have to just bet on 7 stocks. In fact, those still did well, but they were the underperformers. Everything else today came along and said, we got you. You guys take a break. Let's go on over here. Those of you chasing those top 7, those top 10, you're like, oh, that didn't feel like such a good rally today. Am I missing out? What's going on? That is the game of those who chase that. Large caps were actually the smallest contributors here today. And I'll tell you this. Here's how you kind of analyze today. You're happy, right? You see things going up and everything's fine. You know, okay, now we know what the Fed's going to say. Don't forget we had the producer inflation earlier today. That was actually good news. But anyways, here's how you analyze this. You look through your portfolio and you say, any stock that didn't participate at all today, oh, you're up for review, right? It's time to look a little deeper. So you look through your entire portfolio. If you have lots of stocks or ETFs, whatever, if you look at something and you say, hey, nothing happened here, that's got to get some attention. Go see what's going on there. Maybe there's something, maybe there's not there. Like I said, I think the S&P, I think it hit an all-time high on a total return basis. You won't see it on a chart. But I think that's what happened here today. And by the way, did you see where the rally peaked out today? Let's do it. Come on. What are we doing here? We'll go to a 5-minute chart. You see right here? So this is the Fed guy. He starts talking. Oh, yay, 3 rate cuts. Didn't see that coming. Okay. And it starts rallying. Why did it stop right here? Right after the press conference there. Why didn't it just keep going? What happened? Why did we all of a sudden pull back and then not only get back up here, but not any further? Why wasn't it a pullback and then a massive rally? Why was this it? Isn't that kind of incredible? Well, we know, and the algorithms know, that there's only an 18.6% chance of having a 1% or greater move in the month of December. So as the market's rallying up, think about it, all those stats are known. Right? I just like sharing them with you. As we get up there, we go, wait a minute. Well, now we're getting on the edge of something that's statistically normal for one day's move in the stock market in December. So as that happens, just as we normally do, you overshoot a little bit and go, wait a minute, this isn't worthwhile. This is a rare event. We pull back, and as you start to rally again, you go, well, why would it be any different? Sure, there could be a day at some point where it goes up 3% in the middle of December, and you're like, that wasn't supposed to happen. But notice that reluctance as you get towards the 1% there. Really, really cool to see that in just kind of in real time. I don't know. I like sharing that stuff with you so you can see what's going on. All right, around the market there, interest rate sensitive areas naturally were the winners here today. That's okay. That's good to see. Utilities, which have been playing a little bit of catch up there, finally getting a nice rally. I believe they led the way. Let's just see what happened. I forgot to load up my screen there. Utilities were, in fact, the biggest gainer on the day. Real estate was your second biggest gainer there. Of course. Anything interest rate sensitive had a good day today. Look at something like healthcare. Look at financials. Ooh, financials doing well. Consumer staples, right? Good days for those across the board. Your underperformers today, tech, was good. It wasn't a bad day, but, tech. The worst performing index in the S&P. And that goes back to what I was saying a second ago, that it was a broad rally. Really, really good to see. A broad rally where we didn't rely on tech. We didn't rely on, actually, communication services, which is mostly tech. That was your second worst for the day. We didn't need them today. That is awesome to see. That's just something that gets you excited there. Also, I'd like to point out industrials. I might try something here. Industrials, not the most exciting. We just got pointed out. Maybe just, something we want to kind of look at there. I don't know. If I go on over here to the slides, I've got it kind of ready for you. This is in our research site. Here's industrials over the quarter so far. From the October low till about now, it's up over 14%. That beats materials. That beats consumer discretionary. That beats, that beats energy, of course. That almost beats financials. Let's take that out for a second. Consumer staples, it beats them as well. It beats healthcare as well, aside from if you took out the last couple of days, it would have been beaten REITs, and it did not beat utilities thanks to today's rally. Industrials, one of the better performing sectors this quarter, and nobody likes to look over there. People think, oh, that's just kind of a boring area. Why would I look at that? Well, now you got to know. You got to know what's going on out there. All right, let's take a look at the NASDAQ, of course. I had a good day as well, hitting new highs. It's getting interesting here with the NASDAQ, really. It's getting interesting. At this pace, let's just show it. At this pace, here's the one-year gains in the NASDAQ going back to inception there. We're up just about, and actually, if you count today, we're up over 50%. This is as of yesterday's data. I didn't know where the markets were going to close, so I didn't put it in here. So we're up over 50%. Well, does that normal? Does that happen a lot? At this pace, we're gonna beat this, right? If we just even slowly keep going at this pace, we'll beat out 2009's return there for the third best year ever for the NASDAQ, right? Coming out of or just before the dot-com bust when everybody was all excited. That's real, 85% and then 102%. But other than that, this might be the third best year ever there. So that's why I say it's getting kind of interesting. Something exciting to follow. Also, exciting interest rates. Naturally, interest rates came down today. Your bond portfolios likely saw at least a little support there. Any participation, short-term, long-term, mid-term bonds likely saw a rally or a change in value. Like if that's all you own, you're like, why did I make so much money today? Like, what happened? Well, your bonds finally kicked in and did some stuff there, so that's good. I'll answer your questions. If you have any, feel free to post them in there. I am blowing through this here today. There's only a few stocks in the news. I'll just go with this here. Casey's. Some of you live around them. It's like our Circle K here, 7-Eleven sort of thing, Casey's. So basically, if we break down their earnings, they did beat on earnings, but they said, hey, look, we're doing it. This is fine. This is my average guy's breakdown of their earnings. So we beat on earnings, but we're not going to raise the bar. Hey, everything's fine. People are coming in, paying $3 for M&Ms. It's all fine. Don't worry about it. We're just doing good. We want to lay under the radar here. We want to just kind of enjoy what's going on. And that's the ball. That just saved you 30 minutes of research. Cal-Maine with the eggs. They do the eggs. We're going to need Taylor Swift. I don't know how to tell you this, but I hope you're a Taylor Swift fan. Notice the price of this shifting higher here. That avian flu coming back there, which means, oh boy, what happened last time? It's just off the screen here. The price of eggs. Remember the joke there? Eggs were so expensive, and we're all upset about that. Then Taylor Swift does something, and it's like, oh, the price of eggs are down. We're going to need her back there because you're going to need to hold those prices back if possible. They might have they've got the flu thing going on. It's something. I don't know. And Take-Two Interactive is joining the NASDAQ. So Take-Two is going to be in the NASDAQ. It's one of the reasons you saw the stock higher here today. They are replacing a biotech stock that is called Seagen. This hasn't really done anything in a while, but nonetheless, if you like that or you have a NASDAQ-related portfolio that you've built or something, need to make some adjustments. You got Jabil reporting tomorrow, new addition to the S&P. Costco and Lennar Homes will report their earnings up tomorrow. We'll be here to talk about it and everything. Jazz After Dark. Want to hang out tonight? Jazz After Dark, we're going to talk about maximizing your deductions, right? Oh, don't just accept that you can only get the standard deduction. I'll give you an example tonight. We're going to go through and just show you the difference between if you just accept what TurboTax tells you, or if you take 10 extra minutes and think this through, we can save you some money there on or get higher deductions on your taxes to where you get into the itemized deduction category. So we'll cover that. That'll be great. It'll be awesome. Don't you worry. All right, let's see what we got here. I'll take your questions if you happen to have any, and we'll go from there. Do we need to do the thing?
Yeah. Your leaderboard today, we got Tammy, Sean, Bubba, Joe, and Lisa.
Okay, I'm going to throw... I don't... Now, I may be throwing an egg in my face here, but I don't think I recall seeing a Tammy or a Bubba, because that's one of my favorite names, Bubba.
I thought you were going to say Tammy.
No.
Yeah, we haven't. Yeah, Bubba's a new name, and Tammy might also be a new name. The other ones are familiar though. 3 of them are clients.
I should probably preface this, but there's nothing wrong with the name Tammy. But Bubba, that's a cool name. Anyways, if you want to play, jazzwealth.com/guess the Dow, you can play and enjoy the prize if you win there. SPY from 410 to 470 is happy. Ratting us happy. Credit card companies crushed today, interest rate thing. It doesn't matter. It's like, okay, so maybe rates go down a little bit on the stinking credit cards there, but it doesn't matter. People just seem to use these things. Delinquencies will get, I don't know what the holiday. I don't know the actual day that'll come out. But yes, we will be getting that one. So we'll cover it when it comes out, because that's obviously something people want to track with those high interest rates there. Sir Francis said, man, is Pfizer ever going back to the 40s? Yeah, probably go back to the 40s at some point. This is one of those stocks in one of those sectors that has underperformed. Energy, healthcare, 2 areas of focus for me right now, because that's where you have discounts, right? So expect to see, people start doing the same thing. You get to the end of the year and like, oh, it's quiet around here. Let's see what we can do in 2024. Is there any reason? Well, when you sort healthcare and you look through, you go, ooh, that Pfizer, tough run there. Is that worth adding to or starting a position there? We'll see. You think house prices will go up? Well, there's only 4 other times in history. I tried to find it yesterday. I'm sorry. I'm actually going to do, this is new to you too. I'm going to do a live at night class. It'll probably be pretty late. I'm going to go through every single one of my slides as I clean them up for the new year, and I'll just talk about them. I have 283 total slides that I have still sitting here. I'm just going to go through and delete the ones I don't need anymore. But to answer your question, there's only one time out of 4 other times in history where the Fed interest rates peaked and house prices did not go up. 3 of the 4 times, home prices went up after we found the peak of the interest rate hiking cycle there. Yeah. And did the Santa Claus rally happen earlier this year? It doesn't really matter, does it? I mean, obviously we're headed in the right direction now, but if we add much more to it, remember the Santa Claus rally, we get excited to say it, but I believe the average is like 1.42%. We almost did that just today. An entire Santa Claus rally almost accomplished in one day. So I think this is a bit of an odd year here. We'll see. Do you prefer maxing out a Roth at the beginning of the year or dollar cost averaging throughout the year? Always, if you have the money, beginning of the year beats dollar cost averaging. Over the years, there could, like last year, could have been a year where you'd say, hey, I would have been better off dollar cost averaging. Of course, there's always an outlier, but if you break it out over the whole life of you saving in a Roth, those that have the money that can do it on the first day of the year, statistically, you're better off. You end up with a better return. If you can't do it, then we move to dollar cost averaging, and what we do with that is you break it down by the week. We did a whole class for that for clients there. Can Charlie index your slides for quicker access? I don't know. I doubt it. You can't ask him for a lot. Yeah, we put stuff on his plate, and then it sounds easy to do, but then he's like, okay. I could ask him, but I'm going to tell him it came from you. I'm not going to tell him it came from me. No, I'm not. I'm not going in there. You think market access has bottomed? Now you're asking? So I would say that it seems a lot of people believe that market access has bottomed. It was unable to make it below this prior low, which is a good sign considering how aggressive it sold off into that low. That was pretty scary. It's easy to play Monday morning quarterback and say, oh yeah, look, it's bottom. But put yourself in this shoe right here. You're on this day and you can't see what's about to happen. If you had to bet higher or lower, I think a lot of people would have bet lower, but that's an impressive but an impressive one-day decline to see get worked off so quick. I'd give that one credit for that. Yeah. Dollar cost averaging is for behavior. And I would add, if your behavior keeps you in tune with the stock market, let's say you're a $100 a week person. Whatever you do, you put your money in, and the thing is just going every week or month. You're putting some money into your retirement or whatever. You've got the number set. Well, when the market falls, if you can, raise the number. When the market is just like this and just killing it right now, just go back to the normal number or even lower it. Like time the deposits, kind of fun to do. Don't time the market, right? That's my little gray area to get around that. But that's a fun thing to do when you see the market's falling and you go from 100, say I'm gonna put in 135, I don't know, whatever. And then let that go while the market's, think of through October. I'm 135. Oh, market's going back up again. How about 110? Now 100. Keep your average cost pulling lower. I just think that's kind of fun. Anyways, we'll see you later for Jazz After Dark. If you want to come hang out with us, I will be there. And other than that, we'll see you guys tomorrow. All right. And then Wine and Wealth coming up tomorrow night, so we'll have a good time with that. Thanks for watching. Thanks for your support. Hope you learned something. If not, we'll try again tomorrow.
Furnish